This week, Trading 212 shows what it thinks the future of investing looks like. Let's take a look. Welcome back everyone, my name's Paul. I'm new to investing and I set up a dividend investment portfolio with Trading 212. This week, Trading 212 went social. Now you might think this is quite a small update for Trading 212 and a bit of a gimmick. But let me tell you, I think this is a lot bigger than it looks. This week on the app, you might have noticed this new little notification called Pi Library. And on the Trading 212 forum, it was announced that pies are now getting social. This means that now you can look at people's investments, how they're weighted, and how much annual return they're expected to get. You've always had the ability to look at my pie by looking at the link in the description below, but now Trading 212 have made it into a big feature, and they're now making the app more social. This is an extremely interesting move. It's way more important than it looks. Up until now, Etoro has been the main place to get your social investing thing. On Etoro, you can find some lucky trader who's up 70% on Bitcoin, and you can click and copy their trades. In return, I think you pay a small fee and the copy trader gets a fee as well. I'm not part of that copy trader thing at all. I don't think I am anyway. But I use Etoro to buy my Bitcoin and other cryptocurrencies because it seems to me the best place that you can do it. But what's great about Etoro is its social capability. You get to pick a trader that you trust and then you can just let them do all the work. I personally don't know if this is a great idea. I see it as active management light, but there's certain people in the world who seem to see it as a great thing.
I think it's really the future because I think what Etoro is proving to people is the value of social communities and that there are, these incredibly powerful ways by being able to follow and mimic and copy portfolios where you can draft off the best people. Now, the one thing I'll say is that Etoro will have the same problem as everybody else does, which is how do you actually do the dynamic portfolio management for people? Because again, whether you buy a stock that you don't follow or whether you copy a portfolio manager you don't follow, the problem is the same, which is that, you end up with 24 hours in a day and, you're one kid's got a cold and the other kid wants to go to school and, your partner's screaming at you. So, what the fuck do? You stop paying attention. And so, I really think, Howard, like the future is all roads lead to passive active management, meaning the passive part is you find a few brands you trust and those people are actively sweating it and they have so much of their own skin in the game that really what they're doing is they're managing their own PA and you live and die by them.
So Chamath is really into social, active, passive management. That's convenient for him because he owns a company called Social Capital. It's the way he sees it though. He's a big believer in innovative disruption and you can't do that through an index fund or even most mutual funds. So he believes that you should be looking into someone on Etoro who believes in passive active management, who's into innovative disruption, and then you should just basically follow them because they're investing in what they believe in and you don't have to. You can just hand your money over to them and because they are trying to trade it with their own money, they're taking the same amount of risk that you are. Which is pretty good. It beats the mutual funds because the mutual funds just don't care about your money. They care about earning fees. So to a point, Etoro kind of makes sense. And this seems to be now where Trading 212 are going. It's not enough anymore just to be a non-commission app. You've got to be a non-commission app with a few extra perks. And now Trading 212 have added this pies feature. So you can go into someone's pie, you can look at it, and you can even copy it and create your own pie as you would. And at the moment, they seem to be ranked by number of views. And guess who's number one, baby? I know I'm number one just because I've got a YouTube channel and not because I've got the best portfolio or anything like that. And I've put a warning on my own pie because I believe that copying into my pie right now might not be a great idea. Some of my stocks are completely overvalued and it may not be a great point to get into those stocks. But some of them are undervalued and I'm adding to them constantly. Number 2 on the list though is Treba, who I am very, very into. You might remember a few months ago I did a big video on ARK Invest pies. I created my own pies in Trading 212 to mimic the ARK Invest pies. And at the end of that video I found Treba, who has done a lot more research into it than I did. Our portfolios are quite close on the ARK Invest, but I would rather that if you were going to copy an ARK Invest pie, you would copy his, because it looks like he's done a lot more work into it. In fact, he definitely deserves to be number 1 on this list. There's no doubt about that. He's also created a lot of other pies for the ARK Invest, the ARK Q, the ARK Genomics, and the ARK FinTech. And because he's linked them here, I'm going to link them in the description below. Let's get some of these pies to the top of the list. I am a big fan of ARK Invest. I do believe in disruptive innovation. I just think these ETFs are a little bit overvalued at the moment, and I just can't make that decision to get in. That's personal finance. That's my decision. That's all. But I have got some of my own pies. I'll link them in the description below as well. I've got my ARK FinTech, Genomic Revolution, and ARK Innovation pies. I made them a long while ago. I'm pretty sure they're still in similar range. I update them probably once a month. But I also have a hydrogen stock pie, which I haven't invested in yet, but I might get into soon. And I also have my free share YOLO growth pie. This is a pie that I use for my free shares. Now, I've never released this before because I haven't really found it important yet. But you will know that I get free shares from Trading 212 for people who sign up through the link in the description below. And I don't add them to my actual proper income pie. My proper investment portfolio is solely funded by my normal job. That's it. There's no free shares in there. There's no YouTube ad money in there at all. This whole channel is just an experiment for me to try and start investing. But yeah, in my free share YOLO growth portfolio, I've got NanoX Imaging, I've got Alibaba, and I've got Ajax Therapeutics. I also have Vestas Wind Systems in this portfolio, but because it's not fractional and because it's in the new OTC, I can't actually add it to the pie yet. I'm waiting on them to make it fractional first. So if you wanted to look at any of these pies, my ARK FinTech, my ARK Genomic, my ARK Innovation, my free share YOLO growth, or my hydrogen portfolio, I'll create links for all of them and I'll put them next to Treba's links as well. Let's get Treba to number 1 because I think he deserves it, because he's done a lot more work on the ARK Invest portfolios than I have. But like I said, this is very, very important for Trading 212. Etoro is very popular because of copy trading. I'm not sure Trading 212 are going to go this far, but this is a step in the right direction as far as making this sort of social app. And it's proven very, very social so far. Lots and lots of comments on the pie. Thank you so much to everyone who's getting involved. It's really fun. But I think when they list it by copies rather than views, I'll be moving down the list pretty quickly. So it seems the competition is on to become the Facebook of the investing world. Etoro currently leads, but it's very heavy on trading. It's not so much on investing, which is why I haven't lent towards Etoro yet. It is commission free though, as far as I can tell. And the only fees that I've ever been charged on it are for withdrawal. I think it costs $5 to withdraw anything. So if you're going to withdraw, you've got to withdraw quite a substantial amount to make it worth it. I mean, if you wanted to sign up for it, there's a link in the description below. Cheers for anyone who does. But I think this week Trading 212 has really shown which direction it wants to go as with investing. And to me, that looks like a pretty strong outlook for the future. There are still questions about Trading 212 though. Jacob on Instagram asked, "Morning Paul, hope you're well. I was wondering if you could cover this as one of your videos or at least add it in at the end of a video. I think there's a lot of confusion around Trading 212. And he is referring to this Twitter post by the Dodo investor. Honest question, how does Trading 212 earn money? You don't pay to buy or sell. No, is there a subscription fee? Nor is there a subscription fee. Do people who buy shares via Trading 212 actually own the shares?" Okay, very quickly, because I did a whole video and I think it's entitled How Trading 212 Makes Money. But it's very simple. It relies very heavily on CFD trading. CFD trading is still the big bulk of their money right now. I'm still waiting for previous year's tax filings to have a look at them to see if they're still profitable, but even that will be about a year out of date. And CFD is basically like a gambling app. The whole system is weighted against the user, and if the company is having its margin squeezed a little bit, they just cut you off. Pretty simple. They earn this money on the spreads, and I imagine little fees that are tangled into the spreads, and that is funding the growth of the invest in the ISA account. The ISA account pretty much earns no money. I can't possibly see a way how they earn money on the ISA accounts yet. On the invest accounts, they have the ability to share lend. I did another video explaining all that, but essentially they lend your shares out to a big broker who pay them a little fee for it. And yes, you do own the shares. You can even request a certificate for the shares if you really want them. Trading 212 has a big FAQ page, and on that page there, that's where you get all the information from. I really would like to talk to someone from Trading 212 though, because there are a lot of these questions I would just like to hear from the horse's mouth. Like, what happens if Trading 212 goes bankrupt? Where do our shares go? What happens to them? There are a lot of theories on what happens to them, but I've never actually seen anything confirmed. Trading 212 doesn't seem likely to go bankrupt anytime soon, but we need to know these things. We need to know about the redundancy. But yes, Trading 212 does earn money. I'm just not sure how sustainable it is right now. And it'd just be nice if someone could have a chat and confirm it. And because the pies are now so social and people have been commenting on it, I did actually have a conversation with Joseph, and I asked him to send me over his pie, and I'd said I'd review it on here as well. He doesn't seem to have created his own pie yet, but he sent it to me over email. So Joseph's pie is pretty much full of ETFs and one Coca-Cola share at the bottom there. Must really like Coca-Cola, Joseph. We have at the top iShares Global Clean Energy. I really like that ETF, but I do think it's gone too high and I find that a bit scary. You've got Automation Robotics, which is pretty good. Joseph's got 3 emerging markets ETFs here. Not sure why. I imagine there's going to be a ton of overlap in these 3 markets, especially with the all-world ETFs as well. Wow, you've got a lot of all-world ETFs. The distributing and the accumulating one, there's a lot of overlap here, mate. And then you've got MSCI China and India. I get that the emerging markets are probably going to do quite well next year. In the next 10 years, it could go really well, but probably not this much, mate. So personally, what I do in this situation is I'd thin it out a bit. If you're in the old world, you could probably just live with that and it would be fine. But if you wanted to weight towards India and China, emerging markets or even the India and China ETFs would be a good addition. You probably don't need this many ETFs. And Coca-Cola, I don't know why you've just chosen Coca-Cola out of the rest of it. So Joseph in that portfolio is extremely ETF heavy. I use ETFs. I have the iShares MSCI Japan. Just because I need some exposure to the Japanese market. It might get sold one day if I can find some good Japanese companies to invest in. I do like that Japanese companies have a lot of cash flow and a lot of dividends. But obviously over the past decade or so, the Japanese market has gone absolutely nowhere. So there's risks to get into the overall Japanese market, but some companies in there are really good. iShares Global Clean Energy has been a bit of a winner, too much of a winner though. It is not good that this has gone this far this soon. I'm really worried about it. I'm going to hold on to it, and I have trimmed my profit on this many times, but this is overvalued, a massive bubble, and it's got a lot of companies in there that are very, very speculative. Now might not be the right time to buy into this ETF, but also now might just be the time to buy into this ETF. We have no idea what's going to happen in the future. This ETF could carry on going up for the next 10 years. Who knows? I have the FTSE Emerging Markets ETF, as I explained, lot of exposure to the 3 main China companies, and I like that. That's all I really need, and hopefully that's just going to continue to do well. Over the next few years, India, China, blah, 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 are all going to do extremely well. Apparently, I might as well be exposed to the entire market there. And I have also dedicated 10% of my deposits to the S&P 500 ETF. This is simply the closest I can get to track whether my income pie is doing better than the ETF or not. So I regularly input into the S&P 500, 10% of my portfolio, and I'm seeing if I would have done better if I had just put into the S&P 500 or if my income pie is doing any better. And at the moment, my income pie is doing better in capital gains, and it's probably doing far better in dividends as well. I shouldn't really be trying to beat the market. The aim mainly with my income pie is to save my capital. It's to not lose money. That's the main goal of it. But just by luck, I'm beating the S&P 500 this year, so I can't really complain. My entire portfolio currently sits at 2494. This is very early in the day on Friday, so the American markets haven't opened up yet. I imagine this is going to be quite a good day for the market and a good day for my portfolio, so I think this is going to go up by the end of the week. I also must be waiting for a ton of dividends off Trading 212. We'll see how that goes in January, and I'll do a big dividend update in January. Today, I've gone very, very quickly through this video because I don't have a lot of time to edit it, but I'll very, very quickly go through a few highlights of this week and what it's done to my stocks. AT&T this week has had a ton of news, absolutely loads of positive news, and all the stock price has done really is gone up and then back down. Nothing is moving AT&T. So AT&T sold Crunchyroll. It's about to sell DirecTV. It blew up the entertainment industry massively, and it also signed that deal with Roku. This is a lot of good news for AT&T. Its revenues are really good, its cash flow is really good, its dividend is really safe. But in the words of Prof G, it's completely lost its narrative. It just has not won the hearts and minds of investors right now. It really needs some good subscriber news. If it gets that, AT&T's price is going to easily shoot to 40. If monthly subscribers lag behind 8.6 million, AT&T is not going to do well. Another highlight, finally, is Lennar Corp has bounced back. Oh my God. It took a really good earnings report. I knew it was going to have a really good earnings report. I don't know why the rest of the market didn't. I've realized now that there's nothing more frustrating than getting in on a good stock early. Then the market just doesn't see it, so the price goes down. And then one day, because it gets great earnings, boom, the price goes back up again. And I'm back in the same place that I started. I just timed it wrong. It's a bit frustrating, but Lennar, I think, is going to have an exceptional 2021. Housing inventory is down. Mortgage rates are down. 2021 is a house buying dream. Lennar is definitely going to be one of the companies that is going to benefit from that. And I guess I better talk about Disney, right? Because Disney is on a mad one. I watched a lot of that 3 or 4 hour investor presentation, but I got really bored with just hours and hours of them just showing me highlight reels. I just wanted to know the numbers, really. But it got a lot of nerdy ass Star Wars and Marvel fans absolutely gushing everywhere. And that has massively pushed the share price to a level that it's just too much too fast. Again, what is frustrating is that I didn't buy more. When you've looked into a company, you've invested a lot of money and you know it's going to do well. And for me, I even made videos on it. I can't believe I didn't add more money to it. Still, my prediction has always been that Disney will hit about 200 by the end of 2021. It's well on its way to that. I just wish it'd done it a little bit slower. But I think that the parks are the bit that supports the dividend at the moment, and I think it will come back once the parks start reopening. That's my theory. People don't seem to like that I've got it in my pie, even though it doesn't pay a dividend anymore. But the point is, the dividend's coming back, so fuck off. Thank you very much for watching, guys. The investment app that I use is called Trading 212. I also use Etoro to buy my Bitcoin, and if you wanted to sign up, there is a link in the description below. If you sign up to that, you don't get anything. You just help out the channel. Please feel free to check me out on Instagram. Every time I buy something, I always add a little image on there just to say that I've bought something. And please feel free to check out the 2,000 member Discord. It's a big chat room where everyone talks about investing. Most of the time, it's a really healthy environment and everyone is helping each other get better at investing. Thank you very much for watching, guys. And if you found this video interesting or helpful, please feel free to like, subscribe, and invest.